and welcome to another episode of Doubl3Tap. Today we are joined with David Bennahum, the CEO and co-founder of ReadyGG. You guys are essentially the bridge that allows Web2 or enables Web2 publishers to enter Web3 whilst simultaneously offering this platform with a token that essentially aligns incentives and better distributes value. David, hello, sir. How are you?
Pleasure to be here, Jackal, and Alex. Good to be here with you as well. Thanks for having me on.
We're excited for today's chat.
So it was at this point that my recording shut off and remained off for the rest of the podcast, which would explain why you won't see my face for the rest of the show, despite me still being there. However, we don't let small issues like this get in the way, so I've come back from the future with some disclosures. This content is for entertainment and informational purposes only, should not be viewed as financial advice. We are not financial advisors. The views shared by Alex and I are our own and not that of our employers. And we may have investments in some of the companies or digital assets discussed throughout the show. With that out of the way, let's pass it back to David, who's going to tell us about some of the games he's been playing.
I've been playing an ungodly amount of Call of Duty, on mobile in particular. The new Warzone release happened only I think a week ago, and I have a real soft spot for that kind of first-person shooter, arena style. So I do a lot of that. And I also play Wordle sometimes, not the complete opposite of Call of Duty. So that's the other thing I'm pretty addicted to. So there you have it. Those are my two current games.
Are you a big traditional Warzone fan as well, or are you predominantly a mobile kind of FPS gamer?
Predominantly mobile. I mean, I think there comes a point in life when if you're still grinding it on a console, you kind of have to scratch your head is this the best use of my time? And I think that when you purchase a high-end iPad Pro for the sole purpose of gaming, you feel less bad about the fact that you're still gaming hardcore because somehow it's not the same thing. It's on a tablet. So this is my way of processing or not processing the fact that I like to devote something like 10 to 20 hours a week to gaming. But hey, man, I like the industry. I love the industry. And it's what we like to do is build games, right? These are toys, basically, and I like playing with them.
I'm glad my gray chair is blocking my PS5 right now, so I'll just go with I'm a mobile gamer.
Yeah, we'll just roll on from there.
Okay, cool. So getting right into it. So David, first question. What's kind of the overarching thesis behind partnering with acquiring existing Web2 studios and developers? And is this kind of should we be thinking about this as a Web3 publisher play, or how do you kind of think about that?
Yeah. So it's a really good question, Alex. And when we started, this is over almost 2 years ago, our background with the team mostly comes from gaming and then blockchain. And on the gaming side, we had a real appreciation for how technically challenging it is to bring all of a game's operations onto the blockchain. Basically, the blockchain is replacing a centralized cloud computer for all these events that occur in a game. And developers in the gaming context have gotten used to really easy to use third-party tooling, right? People also don't potentially realize that most game studios are not tech companies, they're entertainment companies, and engineers in those companies tend to be very purposefully skilled at very specific tools like Unity or Unreal. And when you bring into that mix truly novel, difficult to solve technical problems, like how to integrate with a layer 1 or a layer 2, it's asking way too much, I think, of most of those teams, and it creates a huge cost center. So I think from our perspective, we knew from the beginning that we had to create tooling that would be usable by that type of engineer, who is the type that's typically in a game studio. The second thing I think, really came to believe was we didn't want to adopt the risk of will the game be successful as a game. We are not a game studio. We are an infrastructure provider for decentralized gaming at scale. So we do not have the ability or the desire to make awesome games from scratch. And if we did, we'd be a publisher. So I would say 80 to 90% of the studios we work with are traditional studios, mostly casual to mid-core, mobile, PC, browser, even console. And we have a few Web3 studios that are in the mix, but by and large, we have decided to super serve that traditional gaming ecosystem because of the audience they bring, right? And then number two, we did decide from the beginning to build the tooling to be compatible with Apple and Google terms of service for distribution on mobile. And that had a big effect on tokenomics because it meant you can't use the token as a method to purchase stuff in the game. And a lot of the tokenomics, token utility in many Web3 gaming projects, like, are justified by having the token be essentially a hard currency that's used to buy the in-game asset. Well, if you go down that road, you've locked yourself out of the entire mobile platform. And so actually from a tokenomics design standpoint, people often say in creative endeavors, like restrictions lead to more creativity. So that was something else we agreed to do, like from the beginning. And I think the combination of all those principles, like focus on those traditional gaming companies, think of tokenomics in a way that's much more diversified than just using a token to buy an asset, support mobile. What does it mean to be compatible in mobile devices? That really opened up for us a very wide terrain. And the last thing, which I didn't mention, is we made a commitment from the beginning to be multi-chain. Giving a multi-chain experience means you have price discovery now as a developer, and you're kind of letting the free market create an environment where blockchains are effectively in our ecosystem in a position where they have to compete with each other for the traffic, which I think is very, very healthy, net positive. And for developers, that's actually a very important feature in what we built. And that also meant, now that we're spiraling a little bit into this, that we had to create a wallet, the Ready wallet, which is really just purpose-built for our ecosystem because it had to have account abstraction and be able to provide the player with a view of their digital assets regardless of what blockchain they happen to have been minted on. And so we have a game, Runestone Keeper, live right now on Android and PC, where the heroes in that game were minted on Aptos, Lightlink, and Polygon. So Lightlink and Polygon are EVM, and then, as you know, Aptos is its own layer one. So we have three really quite different blockchains. And as far as the player is concerned, they actually don't know. This is a more developer story, right? The developer knew because the developer had different deals that they got from those three blockchains as they were making their assets. That's the future, we think, for a lot of this for developers. And they need to have that freedom to like just maximize the cost. And the best way to do it is to let the blockchains all compete. So that's some flavor of, I don't know if I went too far into this question, but that's some flavor of kind of how we're thinking about it. And I guess to be more clear, we've signed over 25 major studios so far, representing about 2,000 games, traditional games, that have about 200 million plus monthly active players. We seem to be releasing about 5 games a month currently, and that cadence will go to 10 or 15 games a month. So a lot going on here. We'll talk more about the strategy behind that in a minute, but that's a bit of where we are currently.
So David, you mentioned there's a whole swath of different types of games, different studios that you're working with. I'm curious, when you're going out and looking for studios to drum up partnerships with, I'm curious, is there a certain archetype of studio that you think is a good fit for Ready right now? Like, is it like casual? Is it core? Is it something else within maybe the game design that you think is well suited for what you guys provide?
Yeah, there is. I would say we're finding a lot of initial product market fit with mid-core and casual titles and publishers that have a portfolio of titles to work with. And I think the reason that's showing up that way is because the risk profile around that type of title, looking at integrating into Web3, is very, very different than a AA or AAA title because those games are already on very tight production cycles. Like, it's not unusual for a mid-core or casual game to update every 3 weeks, every 6 weeks, right? That's in the engineering cadence. It's much more unusual for a AA, AAA to like update at that cadence. When you're updating at a faster cadence, you can then, as a mindset, get much more into A/B testing as a publisher to identify the most efficient game loops. Most of these games are free to play, right? So all the revenue is happening from in-app conversion to purchase, whether it's a mobile or PC game. The way that publishers do that is largely by A/B testing variations on the funnels, and those variations are tested in different markets at different times, but they all happen in parallel and concurrently. And it's just like kind of optimizing ad units on an ad network. It's very, very similar kind of mindset. This all leads to an attitude of testing Web3. It's like, all right, so there's a thesis here that Web3 can unlock cost efficiency in the user acquisition side and unlock more conversion to paid, more time on machine, more potential value in the asset. So if that's all true, rather than argue about whether it's true, let's test it. That is ultimately why they're successful. There's this type of discipline because we tend to work with publishers that are profitable, that are successful. They may be under duress in terms of just the whole industry has been under duress, which we can talk about around macro changes. But the way they're going to get out of this is by finding new platforms, new ways to monetize, and new opportunities to engage players. So that's what we promise. That's not just we, but that's a promise of Web3.
So you've mentioned mobile and you've mentioned browser-based games, or games on PC rather, not putting words into your mouth. I'm curious, where do you see Web3 starting to build up this Rolodex of case studies first? Do you think it will be on mobile? I know you're a mobile gamer, so maybe you're a little biased, but.
I mean, I think interestingly, I think it's going to just appear concurrently. When I look at the distributions of the games, it's probably like 40% on mobile, and then the other 60% is maybe divided between standalone and then like browser-based actual games, right? And they're all kind of running concurrently. I think kind of what's interesting, Alex, is where the UA is most efficient, because the case studies will be strengthened by the scale of the players, like engaging with the Web3 content. And I think that there may be like a situation with mobile where like the UA is just more cost efficient probably for the acquisition, which means those economics are in a lineup perhaps in an interesting way. But I think the browser-based games also have a highly efficient acquisition funnel. The standalones have meaning that you have to download like a game to your PC or something. There's a little bit of a bigger friction in the funnel there. But if that's the case, and it looks like it is the case, actually seeing wallet, conversion to wallet creation in game, like we can track that cost. We're seeing that showing up in some games at $1.50 to the wallet event, which means because it's down several steps in a funnel, it means the install event had to have been like 60 cents. And then you're like, okay, what's happening in the ad unit that's making people click through that heavily? And then the answer is, well, there's a call to action potentially related to crypto or something related to blockchain in the game. Then you're like, oh, that's interesting. So wait, is that a selling point? Because that would correlate with a higher click-through rate, higher install rate, which means your wallet cost is surprisingly low. So we have a couple of titles that are hitting that number. We're like, whoa, like that is impressive. Because then you're like, well, what's the LTV of a crypto player? If it's more than $1.50, what's the payback period? What's the return? Is it 30 days, 15 days, 7 days, 60 days? Like this data has to start coming in. But once you set a benchmark of $1.50 for an active wallet, that is a really, I think, attractive benchmark because it kind of signals like, yo, there's money to be made here in a way that's novel and interesting. Players are clearly engaging.
And as we build up those case studies, I'm curious where you think we'll start to derive like Web3 native KPIs, right? So if you look at DeFi protocols, it's like TVL, right? Like that didn't exist, handful of years ago. I'm curious, like based on the data that you're seeing, are there like new types of KPIs that you guys are tracking? That is something that wouldn't necessarily
be in a traditional game. Yeah. I think there's a couple. So one of them is the tradability and retradability of an asset, which in traditional gaming would not really be a metric. The publisher gets a derivative commission on all the trades, right? So the publisher now has alignment, which would not be possible in Web 2 because they wouldn't be able to kind of ensure that commission, right? Now, without a lot of friction and constraint on how that trade happens. So now the trade can be as open as you want. You can go to any marketplace, an in-game marketplace, etc., and the publisher knows that they're going to get a commission. That KPI will require fusing on-chain and off-chain data because some of that retrading will occur outside of the game, wallet to wallet, and backfilling, like where that thing went once it exited your game, is something we provide the publishers. We do offer that data kind of analysis, but that's a novel kind of funnel analysis because it's now in-game, out-game, and it could go back into the game after being out of the game. So that's the one KPI that comes to mind, right? Okay, another one that's kind of interesting is around the player identity and the player as an on-chain player. So the wallet we instantiate is really just the player's identity. It's effectively a container that's kind of soul-bound, as so to speak. And that is the mechanism by which you can identify who a player is. It's really the wallet as the identifier. Now, that wallet, it's non-custodial, it belongs to the player. And then the question becomes, games that agree to put level progression, achievement data, and other things that you're accruing as a player in that game into that wallet, which brings value to that player, to what degree are players going to become biased towards games that give them that benefit versus deselecting games that do not give them that benefit? The logic being that, hey man, I'm spending potentially, by the way, it's a really fun game. Thanks for making a fun game. I'm going to spend 5 hours, 10 hours, 30 hours a week playing your game. And I'd really love to have the halo effect of the stuff I achieved in that game to be readable and visible by other players at minimum. Possibly other publishers, because maybe those publishers will see how awesome I am and give me discounts and benefits based on that data with confidence, right? To what degree is the conversion rate on these players with offers going to be higher than in a Web 2 context? That's what you're going to wind up A/B testing, right? The analogy might be like on Facebook, I'll run an ad to reach 5 million people and I'll have a conversion rate that gets me, maybe 25,000 registered players. And I'll look at that math and I'll do the math and I'll be like, yeah, that's whatever that is, $40 or something for the player. And maybe that makes sense to me. And then maybe in a Web3 context, same game, it's a community of 1 million players or 500,000 players or 200,000 players. But the relevance of that community cohort is so high to my game that I wind up converting, 50% of them in. And my cost of acquisition there is $10 a player. Because the efficiency and relevance was so much higher in Web3. Then the third thing, since I'll give you the third KPI, that's going to be really interesting, which is around user-generated content. So in the same way a publisher can mint an asset and have it be traded and retraded, we talked about the velocity, right? Where like in the first KPI that you would create game design where like things trade a lot. But then you're like, wait a minute, if that works and is compelling, then why wouldn't I let players get in on this action? Let them potentially generate types of assets that enter that retrading velocity, except this time the player has a skin in the game where if that thing gets retraded and retraded and retraded and retraded, the player too at the top of that creation moment can be remunerated. By the way, along with the publisher, they can all split the revenues here in some way that makes sense. That is really powerful. And then when you put in AI tooling unrelated to Web3, but just like, okay, the reality is the stuff is going to become baseline commodity in every game that wants UGC. That just means you're going to be able to elevate the quality of player creation, so you get out of the really ugly thing. Not that that's held back certain things like Roblox from being really successful with incredibly ugly stuff in it. So there's a tolerance for it. But it's true that when you give people this sort of co-pilot for UGC, probably more people will create nice stuff, and that's like pretty juicy with Web3, right? So that's the third KPI, is like to what degree does the shift occur where players are more likely to be creators in this context because of the economics, how that will work for them.
All right, so we talked about studio and publisher conversion. So maybe we could talk a little bit about converting traditional gamers into on-chain wallets. Curious, like you mentioned the funnel a little bit. I'm curious, like, is there a certain point in the funnel that you're spending most of your time on to help increase those conversion numbers?
Yes.
Okay.
Yes. The short answer is yes, my friend. The conversion point is basically when you go to purchase an asset in the game or potentially acquire a certain kind of rewarded asset in the game, there is a kind of registration event that occurs. And that registration event leads to the creation of a seed phrase, which creates your wallet. And that's all happening inside the game. You're not leaving the game to do any of that. And we're pretty mono-focused on that moment because all the moments before that are pretty efficient. They're like standard optimized traditional gaming moments. Install the app, start playing, right? And then encourage them to make a purchase. That's all like unrelated to Web3. It's just purely like game design. Then you hit this purchase moment and wallet creation moment. And we've actually seen publishers deal with it differently. we have a very strong recommendation on how to deal with it. And the publishers that have followed our instructions are generating like the $1.50, $2 wallet moment, which is like unbelievably awesome. And the ones that don't are generating something that can be as much as 10 times more expensive. The good news is it's really coherent why that's happening, because they need to literally optimize the UI UX of the pop-up, the window, like what are you clicking on. And so we are starting to get that data, and I can tell you what we're seeing. So we're seeing two initial metrics show up. The first one is significantly longer session time in the game on the other side of wallet creation. So what that means mathematically, we're seeing about a 250% increase in session time. Now, granted, that's early data. Let's see how it sustains over time, but significantly longer session time, which then cascades pretty quickly into higher day 7 retention. So we are seeing higher day 7 retention as well. Now, how that translates to day 14, day 30, like interesting. Need to get more data on that. And finally, how that we are seeing increased, we're seeing about a 40% increase in conversion to paid by those people, meaning the intent to buy stuff in the game. So just to be clear here, these are games that might have a 2% baseline conversion to paid, like before Web3. You're looking at that going up to maybe close to 3%. Seems like a small absolute number, but relatively speaking, it's a big shift. And remember, these unit economics are, you live and die by these fractions really mattering to your game economy and to your profitability as a publisher. So those are some, and then the question with that data is like, is it just causal or confirmatory? I don't know what the right way to phrase it would be. Like, is it self-selected that you really want your wallet so you're more likely to be a whale or like an engaged player? Or are you a kind of normal player that's just getting excited about ownership and crypto, which is really interesting because you kind of hope it's that, because that would mean, okay, mainstream adoption, like there's an interesting path here. You guys are like the first people I really talked to about this stuff because, like I said, the data has been coming in really only in the last 2 or 3 weeks. And we haven't published it yet. And we're going to thicken it up with just more data points. But this is some examples of what we're seeing very, very early in terms of change in behavior.
So you've designed the Ready token to act as a medium of value distribution between stakeholders, i.e. the platform, developers, and users. I'm curious, why use a token instead of traditional fiat currency?
You know, we worked within the constraint of building tokenomics, where the use of the token as a replacement for fiat, like to buy stuff in the game, was sort of off the table as a sink for the tokens. And I'll get into more detail in a minute on where that could still happen. What the token allows to happen is the people who adopt the product become owners in the product through the tokenization loop. We believe that is a fundamental revolution in the way you acquire and retain customers on a product, any type of software product, including a tooling product, including a gaming ecosystem. If engineered right, and when I say engineered, I mean both the product and the tokenomics fused together, you create a very, very powerful flywheel that can fuel very large mass adoption, because there's an alignment of interest. So having said that theory, practically speaking, what is going on here? Well, it begins with the developer. Like, they're going to come in, and all the developers coming in are getting token milestone grants. So if they release their game by a certain time, if they get a certain number of users, any kind of KPI we care about can essentially lead to a leaderboard, and we've gamified that whole piece with the token. Now, that's very powerful for the publisher, especially if the token value seems to be going up, because they're effectively becoming owners in the network by providing high value to the network. Is it high value to have a game with a significant amount of adoption to unlock a token word? Absolutely. You're bringing players in. How valuable is that? Is it high value if your conversion to paid is really strong? In addition to you making money, which is awesome as a publisher, of course we're going to give you more tokens, because creating qualified players doing transactions on the network is so valuable to the ecosystem. So the token is a really great way to keep people focused, release the game on schedule, keep the engineering team going. Again, especially if that token has value accrual. Number two, the publishers need the token to mint on multiple blockchains. The token is actually a universal currency, the ReadyX token, where for the blockchains we currently support, Aptos, Lightlink, Polygon, Tezos, and then there's others coming on. Like the good news is you don't need to buy the native token of that blockchain to do the minting, right? You have the ready token. We handle all the back stuff conversion. What that means is, as a publisher, I have this ability to sort of multitask on these blockchains without having a sunk cost of having to acquire their native token, which ultimately may or may not be as useful as I thought it would be, because it turns out their gas fee is higher than I thought. And I'm like holding this token, now I got to go back and sell it on an exchange. And suddenly, as a publisher, I'm getting into becoming a DeFi trader. And it's like, yo, I just don't want that job. The next thing the publisher can do with the token is they can inject the token into the assets that are for sale. Why would you do that? Like $3 skin. Why would you put some of the ReadyX token into that? Well, the answer is it can unlock staking for the player, which means now the player has this sort of hook into the token where, as a player taking actions that are deemed valuable in the ecosystem, notably buying stuff, I can effectively stake those digital assets. It's a token sink, right? If you don't burn that asset, take the token out, the token is not circulating, it's sunk. And then we, meaning the ecosystem fund, not the publisher, can make a determination what the yield should be for the player. And then that shows up as a loyalty reward, meaning the token itself, we could be distributing tokens to players that are taking actions deemed valuable. The KPI I mentioned is an infused asset. It could be other things too, like as a player being active in the community within the Ready community, like a Steam kind of model, that could be deemed valuable in some way. We can measure that. Potentially you're going to get token coverage. Then all this player data is accumulating into their identities. And as a publisher, I can query that data. We're starting to release these tools, and you can effectively run Gleam-like campaigns where calls to action occur, like install the game, play to a certain level, get to buy a certain NFT, whatever in the game. And the attribution to prove that you're qualified for the premium or the bonus for taking all these actions is essentially an NFT cookie. I kind of use this weird phrase like NFT cookie. The publisher effectively minted a cookie, provably, put it in your wallet. And all the cookie basically says is you clicked on this ad, you accept, I gave you a challenge to do something and you accepted it, which means if you then later show up doing the challenge and doing it well, provably you deserve the thing I promised you. That requires buku to minting people. That's like, there's one publisher who wanted 3 million NFTs for this. And it's like, yo, that's a lot of NFTs. And these are not for sale. May I emphasize this? Not for sale. These are data cookies. And so the ReadyX token becomes quite valuable because remember, you're going to be paying the minting fees using the token as a publisher for the marketing loops as well. And so that sort of like starts to create an ecosystem here where as long as I think publishers are coming in and players are playing and things are being bought, you're basically growing a GDP. The token represents the value of that GDP holistically. And as long as that growth is occurring, the economy is growing and the activity in the economy is growing, the token should generally grow with it, excluding all kinds of speculation, yayas that can happen, but just the baseline floor on the token should be solid, at which point its ability to be a fundamentally powerful tool to grow the ecosystem and reward everyone for participating is really novel. I think it's a very novel form of software creation. And it's so exciting to be working on this.
All right, and that just about wraps it up for Doubl3Tap. David, thank you so much. Lots to dig in there. KPIs, converting Web2 gamers into Web3 wallets, talking about the funnel and trying to figure out where Web3 fits in that funnel to help with conversion. Yeah, lots of great nuggets there. Really appreciate your time today.
Alex, Jackal, both of you, really great being here. I appreciate your time and look forward to the next chance to talk together. Thanks.
The content of this video is intended for informational purposes only and should not be considered as investment advice. The views shared by Alex and I are our own, and we may hold investments in some of the companies or digital assets featured in the video.